because again,
I might buy a little bit of it, like $1,000, but I'm not buying a whole Bitcoin. That's
well, actually, I was.
You've been saying that for a while. You still haven't put $1,000 into Bitcoin?
No, I have not.
I have texted. I was texting with a buddy of mine earlier that was talking about the same thing, because when he saw the news, and we were saying, like, that there's they call these people whole coiners. Whole coiners are people that actually hold an entire coin of Bitcoin. Most of the retail people don't even have, and they're not whole coiners. The actual percentage of people that hold an entire Bitcoin is actually really small. But if you think about it, how many people have $30,000 in any one particular stock, right? It's relatively small. So it doesn't really matter whether you have a whole coin or not. I mean, that's why you have to lose the idea of a coin is equal to a share. Like we talked about Melly yesterday, their stock prices, whatever, thousands of $1,500, right? But you can do fractional investing, and it'd be the same thing. The multiple's still the same. If it 5x's, your investment 5x's.
Yeah, no, I get that, but that's why I would only put $1,000 in it, because look, if Bitcoin goes to 100,000, as you say, that's a 3x from here. I mean, that's amazing.
Well, hold on. We're saying in the recent term, in the next 3-4 years, it should go to 6 figures. Okay, even if it gets close, who cares? It gets to 80,000, whatever. The point is, if this is valuable and ETFs come out and people start investing in it, there's only 21 million, probably more like 16 million, because a lot's been lost. Burnt. So you're talking about that it should be worth way more than $100,000. If you just do the math and extrapolate that, everyone needs a percentage in their portfolio. If that does happen, the bull case is massive. Like, it's ridiculous. But these numbers are gargantuan. 100,000 is stupid. That's going to mean nothing. No joke.
Yeah, but this is where we get super subjective, right? Like, 100,000, I can't even believe right now. I don't even think you guys actually.
Why not? We were so close. We were.
I definitely believe 100,000.
We were so close when interest rates were 0. I mean, like, a lot of things have to happen.
But wait. We were so close when interest rates were close to 0. But how much money did they print? They printed $8 trillion. There's now another $8 trillion aside from what was taken out of the markets that's ready to come in. You just saw on the announcement of them maybe possibly approving the spot Bitcoin ETF. It went from 25,000. It jumped up almost $2,000 or $3,000. That's several billions and billions of dollars.
I get it.
I just don't understand why you think that the money isn't there to push Bitcoin to $500,000.
Because to me, Bitcoin operates just like a growth stock. It is not a hedge. It is not inflate. It is the same thing as Palantir. When Palantir goes up, Bitcoin will go up. When SoFi goes up, so if that's the case,
that is
I like knowing what SoFi's financials are.
Well, hold on. You're right about the risk off, risk on. Hold on. You're right about the risk off, risk on thing. You're right. Bitcoin crashes when it's risk off, risk on. People get back into it, but the amount of money that can move into Bitcoin doesn't need much to move it in very fast. That's the difference. Palantir actually needs more money. Bitcoin doesn't. It's just not the same thing in terms of, you're right. You can't look at the cash flows of Bitcoin. It doesn't exist. So it's in that case, it's speculative. It's gonna find its whatever price it's gonna land on. That's probably 30 years from now, dude. And I mean, I can't even imagine what it's going to be at that point.
But if it goes to 100K, it's a 3x, which is cool. I think SoFi can 3x in the same time. So what am I really investing in it for? Because I missed the
no. Okay, so somebody said I didn't answer the question. It's like, it's gold. People don't want to invest. Old people still invest in gold. Young people want to invest in something else that's stable, right? An inflation hedge, or 2% of their portfolio, 5%, whatever you consider right. Bitcoin is that thing. We can discuss Ethereum as well, but Bitcoin is that thing that they will invest in. It'll be part of the portfolio. Now imagine an asset that everybody in the world, 5% of their portfolio can hold.
Can you answer to me why Tesla and SpaceX sold off?
I want to make it.
That doesn't matter.
That definitely matters, bro. This whole idea of holding it.
It doesn't matter if one investor sells something and another investor holds. That is never, ever held up.
Well, actually, no. I think it matters if one of the most innovative companies in the world says, we don't want this on our balance sheet anymore. We're going to it says something about the overall logistics.
People sold off Amazon during this last crash. Big guys, so who cares? I mean, they were wrong. I mean, sometimes
I just think everyone's so excited for it to get to 200,000, 300,000, 400,000. And what if it doesn't?
It's going to. This is not.
What if it doesn't?
There is no. In my world,
I can argue how Palantir gets to $50. There's a lot of numbers I have to go through. I can't argue how Bitcoin gets there.
Okay, but there's
just like maybe.
But once again, it's like you saying I can eventually get to LA on my bike, so it's better than a car. They're just not the same thing. They're different modes of transportation.
I have no idea how that analogy makes sense.
Because Bitcoin is not a stock. It is a currency.
That's my point. I have no way to know. You guys are just screaming.
No, hold on. I'll give you simple math.
Look at the comments. B. Martin, it is a currency that cannot be inflated. Do you understand that?
I get that. That part makes sense to me. I'm saying I missed the run up. I missed that run up from $300 to 30,000. And so,
look, you're not getting your 20x right now. That's not happening right now. So I understand what you're saying.
So if I'm investing for a 3x, I'd rather put that money in SoFi.
So once again, a 3x is like, that's the bare minimum, dude. So this is what we're trying to say.
I'm not saying a 3x is bad.
I want you to take a look at why. Okay, if people do adopt. So once again, it's one of those adoption things, right? Just like Enphase or Tesla. If people adopt these things, so Bitcoin is worth right now market cap of $537 billion. And if you look at Apple, which is worth $3 trillion, what do you have, a 6x? For it to be just worth one company in the U.S. stock exchange? One company? Are you serious? This is supposed to be a currency that everybody in the world is supposed to have at some point. So if there is some allocation, allocation of 1% or whatever, Bitcoin should be a 6x. Okay, minimum.
When is the 6x happening?
Well, I'm not going to give you a time.
Look, Myra Singh's point. What is any currency backed by? It is backed by just consumer confidence.
I'm not arguing about the US dollar being better or anything. I'm just saying
but it's this idea that Bitcoin isn't backed by anything. Look, at the end of the day, right? It's like it is right now a speculative, volatile asset. As the market cap increases, it will grow into the perfect store of value. And that's what it needs, is a higher market cap. And it is trending in that direction. And like Vitaly said,
just look at
4 billion Bitcoins are basically burnt. They can never be traded because they're just gone. The keys are gone, whatever. The computer, the hard drives that stored them are gone. There's only 21 million Bitcoins. 19 million of them have been mined already. So we have a majority of the supply is already out there. Since it can't be inflated, do you understand that, like, it can't be inflated. So all the new money that comes in is divided among the circulating supply. That's not the same as a company that can easily split its stock.
I understand that. That makes sense.
Stocks. So when you try to compare it to, say, Palantir could go to $50 and then they could split the stock. They could dilute you.
Correct.
That it does not happen in Bitcoin. There's no one that can do that. Its price is decided by what someone's willing to pay and who's willing to hold. Plus, it also has a built-in churn because the miners themselves are paid in Bitcoin and they need to sell Bitcoin to fund their operations. These halving events are designed to cause the miners to slow or stop their selling, which allows the price to inflate because they're not going to sell knowing that they're going to be basically getting half of the reward in 250 days.
Oh, look, Carlos, all of these arguments make sense. The problem is I am not one of those people that believes hyperinflation and like the American dollar is dying, blah, blah, blah. So I'd rather buy Robinhood and get my exposure.
You don't have to believe it, though.
No,
I don't want to own the actual Bitcoin. I'd rather own proxy plays that benefit off of that. I can still see their cash flows.
Yeah, no, that's bad, by the way.
The only reason you really need to hold Bitcoin is if you think the U.S. economy is going to shit. And like that's
wrong. That's wrong. Hold on. I just want to say,
share my screen, by the way. Share my screen.
Because if it's about returns, if we're not talking about ethics, we're not talking about like freedom, we're talking about returns. I don't want to hold something this volatile at 25 years old when I've already got other volatile stuff to worry about. So like I'd rather hold other volatile stocks, not Bitcoin, that I have no sense of in terms of really understanding.
He's like, at 45, I'll hold Bitcoin when it's $1 million.
Right. I'm going to put my $1,000 into
$1 million. You're so confident it's just going to go up. And I'm I don't know.
But Amit, the biggest problem is like saying, oh, I'd rather hold SoFi or I'd rather hold Robinhood is some of the biggest problems. Because if you just say, oh, it would be much easier to get a 3x in SoFi. Well, is there a stock that you can get a 4x that's more likely than SoFi? Like maybe DNA might get you a 6x or whatever. And then if that's the case,
then we have a debate. Then we get to actually have a conversation. With Bitcoin, you're just telling me it's going to go up versus with SoFi, I can look at the balance sheet and all that stuff.
I think it's a part of a portfolio that you hedge into, right? So
which is why I said I'll throw $1,000 into it. But outside of that, I don't.
Yeah, if that's the percent of your portfolio that you want in it, then that's fine. Right. But some people want a heavier percentage. And I don't just think that it's just basing on what has the highest possible return or else.
Wait, why else would you have very high risk? Then?
Can you bring up Dex's comment? Yeah. Bro, your whole port.
Yeah, but the thing is, I can understand those positions, those stocks, right?
But Bitcoin is bad.
But here's my thing. Why would you invest in Bitcoin if it's not for the return?
There's two reasons why.
Because if you're going to give me some argument about the US dollar dying and all this stuff, even VITALY doesn't believe that shit.
No. I don't.
So if that's the reason, it's only a speculative.
But understand, no one is saying that the US dollar is dying. But what we are saying is that it's going to get harder to get returns in USD because the currency is devaluing.
I disagree. You invest in the right companies.
No. The actual value is inflating. When we buy stocks right now, the reason why you invest your fiat currency into something that is increasing in value is to counteract the inflation. So say, for example, if the US dollar, say it inflates 7% per year.
It's not doing that though.
But I'm just saying, if it inflates 7% per year, that's actually a 7% hit to your portfolio.
I get it, but you can't make that stretch because we were at 9% in June. Now we're closing in on almost 2%, under 3%. Like we've been Jack Dorsey said 5 months ago we would have hyperinflation.
Hold on, you're treating this like it's one thing or another. Yeah. I'm not saying I don't have my whole portfolio in Bitcoin. I'm saying it's a part of a portfolio, just like real estate is. By the way, I own real estate too. We don't talk about it all the time, but I have real estate.
No, I agree. But VITALY, you have a part of your portfolio in Bitcoin because you care about the returns. Carlos and Tanner are trying to tell me you should actually hold it because they're afraid of the U.S. economy collapsing on the dollar. I disagree with that. I don't think
it is about returns. It is about returns, but part of the return is like, for example, if U.S. dollars, like Trueflation, by the way, just cranked up the expectations for inflation up to 2.7%. I think it was at its lows like 2.3 or whatever.
Yeah.
So 2.7 is heading back up potentially. If that's the case, Bitcoin is separate from this. So if, for example, just because the US dollar is inflating, that is actually pushing up the value of the
No, it's not.
Bitcoin.
No, it's not.
Yes, it does.
No, it's not because Bitcoin was at its lowest in the past 4 years when inflation was at its highest. You guys cannot
wait.
That doesn't matter. That doesn't matter. That's because the drought in Bitcoin in terms of people actually wanting that asset was lower than what the inflation was.
Wait, hold on. But why didn't they want it more when we were having 9% inflation in June 2022?
The same reason why people didn't want gold. People didn't feel like betting on an alternative asset. But that doesn't mean that historically it hasn't been a good safety hedge against inflation. Gold is it's the new gold. It's digital gold.
When has it?
No. Hold on. You're right about that. And that time it was risk off. But the thing is, it returned pretty quickly. It didn't stay at those lows, by the way. It didn't stay there long. So the people who did not get it at the 14,000, it went up to 30 pretty fast. So my point is that it recovers pretty fast.
So did stocks.
But
in a year, it came to 30,000. So
once again, you're saying it's either or. I'm not saying it's either or.
No, I'm not arguing with you, VITALY, on that. You and I are in agreement. I'm arguing with these two guys that are telling me you own Bitcoin because you're afraid of the US dollar collapsing.
No, but you're not
afraid of the US dollar.
I'm not saying that. I am not saying
I'll be long dead. I think
I'm not saying that the US
I'll be dead too. That's why I don't give a fuck.
Okay, but I just want to make a point here because you keep saying this and it's not true. I'm not saying that the reason to hold Bitcoin is because the US dollar is collapsing. What I'm saying is as they print more fiat, look, I've said it before, there's an infinite amount of fiat to buy a finite amount of Bitcoin. That is a great like bumper sticker way of looking at this. As they continue to print US dollars, which they can print at any time, the value of the circulating supply goes down. Inherently, it goes down. You see this reflected in the prices that we're paying for our goods and services. You see this in the prices that are reflected in our housing. This is why those prices go up. They go up. If you're holding the asset, in other words, if my house value doubles, right? It's because it will take twice the amount of fiat currency to purchase the same home, like for the value of what you're getting. That should tell you something.
It tells me nothing. What you're doing a basic you're doing like a textbook argument about inflation, supply and demand, and all of it makes sense.
But the
problem is none of it's happening in the real world because when inflation was at its highest in 40 years, Bitcoin went down to 14.
That is capitalism runs on supply and demand. That is the law of markets, supply and demand.
Yeah, but there's also a big ass military in capitalism called the United States of America that is the reserve currency of the world because even if everything's inflating, everyone's still going to use the dollar. And until that changes, I don't see your thesis. When that changes,
you're confusing the idea of American dominance.
Yes,
and like no one's talking about the non-dominance of the US dollar. What I'm showing here on screen is that during this time that the US was still the main big dog, the dollar was inflated away. Okay, and during that time, if there was a Bitcoin back in 1913 or whatever, there would still be the same outstanding 19 million Bitcoin in supply with a total of 21 million. Okay. What would the price of Bitcoin be if started back then, holding on to today?
It's funny. It's funny. We actually know
that in gold.
Yeah, just look at gold. Can you bring up the gold chart when the ETF and everything happened?
Oh, that was
wait, but real quick. I have a question here. So let me ask, and this might be a really stupid question. I'm honestly.
Tanner, are you bringing that up?
This might be a stupid question.
Maybe.
So Tanner, you're saying if we had 21 million Bitcoin from 1913 to now, what would the price be? Probably, millions of dollars or something.
Yeah.
My understanding, and again, this might be totally naive, is the reason we also print money is because we have a bunch of people in the United States that didn't get rich off Tesla or Bitcoin or whatever, and they need food stamps, and we need to spend in order to have a healthy society. Is there any argument here for the reason we have fiat currencies? Because we need to be able to print to literally give dollars to people.
But you're still on the case of this is replacing US dollars. I'm not saying it. I'm saying it's a good hedge on US dollars.
It's just one of the things. Tanner, it's not the only thing. It's one of the things.
Yeah. And
my point is the reason the dollar is inflated that much is because we printed a shit ton of it to also pay for stuff.
Okay, so you have to go.
And some of that stuff we needed to pay for. Like
no.
People could have paid for it. People could have paid for the same goods and services with the existing supply. But what happens is the only power that money has in our society is when it moves. Every time money moves, it becomes a taxable event, right, for the government. This is a really important thing to look at. I brought it up before, but really take a look at this because this goes to Vitaly's point. My point is the U.S. government printed all that money because they needed to give people money to spend, because only when money moves does it have any real power. And that's what creates taxable events. If everyone holds on to all of their money and I never pay anybody or I never go to the store, then state governments and local governments don't get to charge sales tax. If I don't buy gasoline, then they don't get to charge gas tax. Do you understand? That's what allows. That's why you need.
But Carlos, let me ask you a question then. So when Silicon Valley Bank collapsed and the U.S. printed, I think $400 billion to deal with the banking crisis, is your argument the U.S. should not have printed those $400 billion? I
mean, you get into like moral, ethical, and legal things. No, I don't.
No, because this really matters. Because if your argument is like that's the reason why Bitcoin's important because we keep printing the shit out of the dollar, my counter argument is sometimes we need to print so that the whole fucking economy doesn't collapse. Like what would have happened in March if we didn't print 400 billion. Tanner, any thoughts on that?
Okay, but what you're saying, what you're saying is a bunch of people acted irresponsibly.
Which I agree, and lock them up. Whatever.
Let me finish.
We still can't let the economy collapse.
But let me finish. A bunch of people acted irresponsibly, and so we're going to come in and dilute the rest of the existing currency. Everyone else in America and basically everyone else in the world that has it as a reserve currency. We're going to do that, and to fix the problem that a bunch of irresponsible actors did, 100%. diluting the existing supply and incentivizing others to do the same thing. No,
because Roku had 400 million in Silicon Valley Bank, and a lot of people work at the Roku company own Roku stock, and if Roku collapsed,
what happens in a society? It's the same thing in California. They stopped prosecuting people that steal, and because of other reasons.
Carlos, I get, but I'm talking about on a large scale. Like what happens if like during COVID, should we not have printed some money to help people when they were? You can argue about stimulus.
But the problem is you're talking about two different things, right? Yeah. It's not a gray area, because if we were just talking fiscally, okay, just pure money right now, okay, or monetarily, sorry, absolutely they should not have done any printing. Quantitative tightening would have been much better for the dollar in every essence, but then quality of life goes down. So this is why we can't just Volcker our way through the markets, because yes, they would be good if you were an economist, but if in terms of a socialist, like how are people living day to day, that makes things harder. Okay, so people's jobs are not just how can we make this economy as strong as possible. No, it's balancing 1,000 different things, and that's why it makes it so hard in order to push any sort of policy. But I don't even think that's part of the problem.
So that's why I don't know why you guys think the dollar is so full of shit when like we do have to print it sometimes.
No,
yeah, that's fine. But you're talking about there's a difference between what's good for the American people and how to get yourself financially rich. Right? Is it smart as an investor to hold 30 homes? Yes. Is it not good if a bunch of investors hold all of the homes and everyone else rents? Like you're talking about two different things. It would be great if everyone could own a home.
Well, I agree. That's why I'm on the VITALY side, which is like a portion, $1,000 bucks.
No. If you were on your guys' side, hold on. Let me say something. If you were on my side, you'd be smart enough, just practically smart enough to see the things that are happening around you. The ETF is coming.
I agree with
some
all
point.
That. I agree with
Bitcoin adoption has gone more mainstream in the last decade. It's just obvious. These signs are everywhere. So if you see these signs and they're happening. It's like solar panels on a house. I see them. Another guy says that'll never happen. I'm like, well, I just saw another house.
Which is why I would speculate on buying some Bitcoin.
Well,
off
that's
these
fine.
macro
But
things,
then you should
not
just
because
put
I'm
it part
afraid
of your
fiat
portfolio.
currencies will die.
Hold on,
That's
that's fine. But then you put it part of your portfolio. But you're not even arguing it. It's like I'm doing $1,000. Like you have 20,000 in options plays on Robinhood. You have so what's $1,000
first of all,
on Bitcoin?
it's $5,000.
The other part, the main comeback to what you're saying about like printing, right? We have to print sometimes to stimulate the economy. Look at the effect of that now. Look at how many people are being displaced. Look at just the small rise in prices are basically forcing people out of their homes. Look at the pain that has caused just by deflating the economy, by deflating the currency by that little bit. And I would argue that remedy was way more painful than what it was trying to avoid in 2020, 2021. Okay. And now I agree. Now we have 8 trillion new dollars that are out there, and we have millions of people that are being displaced. It had massive repercussions on real estate, had massive repercussions on the job market. So what was the net benefit? What was the net benefit? Now we can argue about whether or not we should have been locked down, whether there should have been stimulus, whether the government was honest to us about that all day. Right. But I'm just saying, if that was the plan, I think what Tana was saying is correct. Suffer through it in the short term. Suffer through it. Don't inflate the currency, because then once you get out of it, once we declare that COVID is over and we can all go back to work, the financial conditions would have been exactly as they were before in 2019.
First of all, you can't suffer through something like that. Yeah, if the government didn't step in, I think we would be in a massive depression if they didn't step in. The problem is they stayed too long. That was the issue. But they had to step in.
It's a crazy balancing act, and I don't think like anyone here, I don't want to speak for you guys, but I don't think anyone's saying there's going to be any collapse of the U.S. dollar.
Yeah, don't quote us as saying that. I'm not saying that.
Yep,
it's inaccurate.
But just overall, part of the policy is to slowly inflate that dollar, because it helps us keep our position, and it makes debt stay down, right? Debt does not like an inflating market, because you're still owed what you're owed.
Tanner, what percentage of your portfolio is Bitcoin?
Hold on. One thing I didn't say before is like
very low percent, like less than 1%.
Probably less than. I don't even know if it's 1%.
So, Amit, I just want to make sure that the way this country
like I said,
works,
I'm not a Bitcoin maximus. Amit, I said I'm not a Super Bull. I'm just 1%. I am fine. Bullish.
He's a little baby bull with like one horn.
Yeah, I am long Bitcoin. I hold a position in Bitcoin. That's what I'm telling you.
So I want to just point out the way debt works in America and everywhere, by the way, is that money is created through debt. Okay, there is nothing separate from it. Okay, we literally create money because of debt and for debt. Look at the dollar. Did you ever guys read what it says in the dollar?
In God we trust.
No, this note is back. Whatever. There's
legal tender to pay off all debt. Anyway, the whole point
of $1.
Yeah.
Yes, and while you're doing that, bring up Heinz Ketchup's comment at 441, because
the whole point of
sorry guys, I have too many dollars. I have to.
The whole point of inflation, by the way, is it's gonna be in any fiat currency, is because you need to keep printing it to pay off debt. It has nothing to do with paying for food stamps. By
on
the
the
way,
left side, what does it say there?
This note is legal tender for all debts, public and private.
Debt.
It's all from debt. Everything. Every dollar.
You guys
is
know
from
you
debt.
can make 9/11 on a $20 bill. Have you guys seen that?
Yes,
that's a real conspiracy. We should be
but to just underscore Vitaly's point. Vitaly's point. Okay, when the government needs money, the money printing, the act of money printing automatically creates more debt than the actual amount that they borrowed, because the only currency that can be used is the U.S. dollar. You borrow it from the Federal Reserve. If I borrow $10 million from the Federal Reserve, there's a debt attached to that. There's a rate. Say it's 5%. So now I borrow $10 million from the Federal Reserve, the U.S. government does, to fund its operations, and then needs to pay that back, the $10 million plus the interest.
No, I agree, and we're going to pay like $400 billion in interest.
Where does the money come to pay? Where does the money come to pay the interest on the debt that you borrowed from the Federal Reserve?
We got to print it. And that's a problem.
You have to borrow more money.
It's not a problem.
And that money comes with more interest. Bring up Heinz Ketchup's comment at 441, because this is essentially.
Bring up Heinz Ketchup. He's
Heinz Ketchup. He's got a great point. That guy. He says, if Karp said we will do share dilution forever, I think people will hate it. If people hate this, you should hate money printing. That is exactly what it is.
Yeah,
money
but a
printing
country
is
needs
share
to print money,
dilution.
Carlos. It's not a fantasy world.
But you keep saying that without proving why. We've just told you the million reasons why.
COVID. If we didn't print some money, we would have, like as Vitaly said,
look. Once again, well, we do have to print money, by the way, because we're in a fiat monetary system. We do have to print money.
Well,
That's
you
just
have
bottom
to.
line.
You have to pay off the interest on.
Yes. So I'm saying we're in that system already.
Exactly. But but the point is that leads to hyperinflation. It's inflating no matter what.
Where is this hyperinflation? Where is like?
Did you see the chart Tanner brought up?
Well, hold on. At some point, you got to realize
because things have changed over the 100 years.
Hold on, but hold on. But if you had invested those dollars, why do you think a lot of these boomers,
so if you invested in 1913, you'd be dead. It doesn't matter.
Hold on. If you had
invested, I didn't get
in
my
the
money
stock
yet for
market,
the super chats.
if you had invested in the stock market and started to roll that over a generation, this is how you create generational wealth. If you had invested in companies in the 40s, 50s, and 60s, and locked in essentially that asset and it continued to grow in value. See, if you're holding the asset and it's not, if you're holding the dollar and it's not in an asset, the inflation is lowering the purchasing power of that dollar. If your dollar are transformed or transported into an asset, you are, as it inflates, your asset is gaining value. That's the difference.
So invest in stocks.
As a lot of people say, 1 Bitcoin equals 1 Bitcoin, right? Like the whole idea being that your $1,000 back in the day is not $1,000 anymore.
Yeah, so, yes, obviously because of what Carlos said, but that doesn't matter because like the economy changes, the world changes. We have to have a healthy society. That's why I think if you're buying Bitcoin, it's to speculate. It's not because we're getting into hyperinflation. Like,
okay, but the Tanner's point. But the Tanner's
point. It's also a bet on. Let's say your money is inflating away at 2% per year. Okay. Mm-hmm. And you're keeping your money in a savings account that doesn't even bring you in 2%. Right now, that's very inflated right now.
Right.
But before, savings accounts weren't even doing that. So your money was actually going down in real spending dollars, okay? In terms of what you could buy.
But then you should have put your money, you shouldn't be on cash. You should have real estate, you should have stocks, you should have an asset.
Right. But that's why financial advisors push those products. But it doesn't mean that everyone follows that. But another alternative to that investment class would be Bitcoin. 1 Bitcoin equals 1
But
Bitcoin.
you see how you said alternative investment class? It's something to invest in. It's not like, oh my God, I have to hold this because hyperinflation. It's like, yeah, you don't want to have your dollars inflating away. Just like no one wants to have their, so you invest in stocks, real estate.
Sure.
So one exciting thing about Bitcoin though, is it does lead to some utility, like making, cheaper efforts in the ability to do remittances, right? There's no cheaper way than to send someone money overseas.
Sure, but Tanner, you know how you said alternative assets like Bitcoin, that then to me becomes a game of returns. If it's stocks, crypto, real estate, that's why I started this conversation with like, all right, what can Bitcoin do for me? I missed it. I'm sorry I wasn't there in 2012 with VITALY doing the Bitcoin mining, but I missed it. So at 30K, what return do I get? If you guys can't tell me I get a decent return compared to SoFi, which is so much more easier for me to sleep at night knowing Noto has my money, then I'm investing in SoFi.
Once again,
we've said it before. You're comparing a stock to a currency in the
because
same way. Wait. Please don't interrupt me. What I'm saying is you could make the same argument. You know what? Take your entire portfolio, liquidate that shit and buy a house. Okay? Buy a house because that house will be a safer store of value. And if you rent it out, it'll generate more money than any dividend. But like, we're not making that.
That's a fine argument. That's not a bad thing.
Right. But that's the case that you're making right now. That's the case that you're making. You're making it seem like buying SoFi is the same as buying Bitcoin. It's not.
It is because I care about returns. That's all I care about.
It's the same, but it's not.
No. If you only care about returns, you just buy DNA and you wait for the 100x.
No.
So
But
you don't have to be
irresponsible about it. But like, if I want a 3x on SoFi from 8 to 24 versus a 30,000 to 100,000, do I think SoFi can grow? Do I see their ads every day on Instagram? Do I have some more conviction? Yes. And so if you have more conviction in Bitcoin because you watch Michael Saylor, then invest in Bitcoin. But don't tell me you have to hold it because of hyper.
What I'll say is this. What I'll say is this. Okay, there are a lot of really smart people with a ton of fucking money, and you're seeing just like the engine revving on just the news of what we saw today. There's a ton of money, whether it's hedge funds, individual investors, large shareholders, or just people with a high net worth that are waiting to have an asset like this. This regulation clears the way for them to allocate more than 1% of, which is what's typically recommended, of their portfolio to these things. And let's not forget that Bitcoin is a worldwide asset. It's a worldwide asset. You have access to all the billions of people on the planet can all buy this thing in every one of their local currencies. You talk about like TAM, right? Even though it's not a stock, TAM, the addressable market of Bitcoin is everyone on the entire planet. And we've already seen some governments transfer over to Bitcoin as their currency. What I'm saying is, the price that you're seeing right now, it seems like, oh man, it's so high. It's $27,000. This is with such a relatively small percentage of people actually investing in it, and with a tremendous negative sentiment against it, and tremendous regulatory hurdles. We're starting to see a bit of that be cleared. And ask yourself, why would BlackRock want to create a spot ETF? Why do so many people want to create a spot ETF on this? If it's everything that you said, if fiat currency is the better way to go, they own 5 to 20%. They own 20. No, but they don't want to speculate. They want guarantees, because that's why they own 20% of the entire stock market. They want to win no matter who wins. And that's why they try to force companies to do what they want to do, because they want to guarantee their wins. So why would they even fuck with this little asset if it wasn't what VITALY and I and Tanner are saying it is?
Well, let me ask you this. Okay, so let's say obviously it's a worst case scenario. The dollar inflates. I'm not saying that's going to happen. But just to be even a safe investor and to be completely diversified, just like you diversify in all sectors, right? Equities, I keep going back to real estate. Crypto is going to be a real sector. We see that happening.
100%. Yep.
It seems just like people should put 1%, which is almost nothing. It's just like if anyone
I
lost
agree.
1%,
I said I'll do that. You already won me there. I'll do that.
Yeah. So that was always my point, that everybody who should seriously think about this. And the good thing is we can do it. This is actually really important. We can do this before the hedge funds are allowed to do this. Just remember that. They're not allowed to put money in until it's regulated. I know we're taking a bigger risk in that case, but
I'm actually not excited.
But they're waiting. They are waiting to pile in. They are waiting to pile in, because then they can offer this as a legitimate place to store some of their clients' money in something that is not inflatable, that doesn't have a CEO, that's not going to have that. Bitcoin's not going to go on Twitter and start saying some right-wing shit. You know what I mean? It trades all over the world, borderless. If you want to move $10 million in gold, you need a boat. You want to move 10 million in Bitcoin, you need a USB drive. There's so many use cases for this. It can be mined anywhere in the world. Anywhere in the world, it can be mined. Right. As a matter of fact, you're probably better off mining this in places like where it's freezing cold, right? And say even in Antarctica. Why? Because the miners generate a lot of heat, and so there's so many use cases for this thing.
I'll point out another use case for AMIT. Okay, when you steal our money from Odia, the best way to do it is through Bitcoin.
Well, yeah, I mean, look,
transfer it to crypto, transfer it to something like a private coin. Shuffle it all up, and you've washed all the money and you're gone.
And actually, Rango brought up some really good points. I don't know if you've seen it. He said there is a lot of demand, even on the institutional side. What you saw in 2020 as it ramped up from basically 15,000, blew past the previous all-time high and went straight to 70,000. Why? Because there is a ton of demand. That wasn't retail. Those were institutional investors. And S&P 500 companies are always looking for a place to park their cash that they can make a better return than the rate of inflation. What better than an asset class that doesn't inflate? And he's saying, and Rango was saying there's so much demand, and he's saying people want to buy this in their 401ks. That's effectively the same as burning the Bitcoin. If you know that it's locked in for 30, 40, 50 years, that's the same as burning it. It's not going to be sold for 20, 30, 40 years, depending on when people buy it. Once you start getting access to that, and people can start putting it in these long-term holdings that are legally bound to be long-term holdings, I mean, the price of this is going to be ridiculous. This is like the last chance, And
by the way, in Wealthfront, I don't know how other people do it, but Wealthfront now has a thing that they just allocate 10% if you want to crypto, to like GBTC and all that.
Right.
So I just deposit there every month for the last couple of years, and they just do whatever they got to do. You don't even got to pay attention to it. It's so little. It doesn't mean anything. And I think that's the way to do it for you, Amit. Just do some sort of account like that where it's just part of a portfolio.
So I wanted to say a couple of things. One was someone said it in the chat. It's not necessarily should be looked at as an investment, more of a store of wealth. It's very similar to gold, but like Carlos said, it's much more expensive to service gold. And for example, Amit, do you know why gold was chosen as being that store of wealth across the world rather than any other metal?
No.
It's because you could drop it to the bottom of the ocean. You could throw it up. You could smash it. You do whatever you want with it. At the end of the day, there's still going to be that much gold on Earth, right? It does not tarnish. And that's sort of the similarly exciting thing about Bitcoin is that there is so much supply. In fact, if anything, gold is a little bit more scary because they could find a massive
right. They could find
supply.
a
In
massive
fact,
gold deposit somewhere, and then the value of gold plummets overnight. But we already know. We know the exact date that the final Bitcoin will be mined. You already know it. It's like 21
it's just
something.
math.
You just know, right? It's just math, and we already know it. And what happens as this thing starts to grow in market cap? Remember, there's no like this. The idea of share dilution. It can't happen. You cannot create more Bitcoin. And so what does that mean? As the money piles in, it's divided. It's just basically divided over the existing supply. And we already know that, say, 4 million Bitcoins are essentially gone. There's a really, really small finite supply of this asset class.
I mean, how would you feel about missing this?
I
If it
would
does,
not
if
give
it
a-
does
bro,
10, 20x, like how would you feel about it?
I don't care. Like I just like
Okay, well, that's a big deal if you don't care. Like,
because I don't think that 1020x is going to happen in the time frame I think it might happen over 30 years. I don't think a million bucks. I don't think that $1 million is happening.
Can you bring up the rainbow chart, Vitaly, just to get an
Yeah, but-
idea of the range? Bring up that.
yeah, that is
I'm
a
gonna
great
bring up
chart.
At that point, though, this idea of when it's going to happen is just speculation. And how would any of us know? You know what I mean? Here's
Exactly.
one thing before we talk about this. This is also the easiest time ever, and it's only going to get easier to get into these assets.
right.
Yeah.
Like, to the people who got in at 2013, that was a miracle product that they were doing. That was crazy that they were even able to, buy Bitcoin back then. It was so incredibly
It
hard.
was hard. You had to move your money. Had to wait a
Oh
few
my God.
days. And it was kind of shady the way that you
Yeah,
had
all
to
the
do it to even
exchanges
buy
were
it.
super weird.
Right. And to Tanner's point, if it becomes something that's super easy, now you can buy it on Robinhood, you can buy it on PayPal, you can buy it on SoFi. It failed. The BTC rewards card failed, but that's another way that people can incentivize you, give you your cash back in Bitcoin. There's so many ways that they can incentivize you to purchase this asset where you might not even know.
Institutions had a really, really hard time buying Bitcoin. And now with things like, Coinbase Prime or BlackRock Aladdin, these sorts of things, makes it so incredibly easy for big money, smart money to get in whenever there is a return, in these massive spikes. Go ahead. Talk about this.
Look at the rainbow chart. Dex is making fun of me in the chat. He's saying Kamlos always says bring up the rainbow chart because look at the rainbow chart. Like, are you kidding me? If you don't, I don't know if you know what this is, Amit, but Vitaly will explain it to you.
Does it have to do with Pride Month or?
Yeah.
Yes.
So look. Obviously, there's a little bit of voodoo here, but it's been
a couple times because I'm pretty sure we broke under this.
But this is the this is the logarithm. This is the overall logarithmic progression.
Bitcoin price action, right? Exactly.
Right. Price action over the
LGBTC.
But see, when I look at this, I can look at Tesla stock and I'd be like, well, yeah, if I bought Tesla in 2010, I'd be up so much.
No, you know why? No, you know why?
Bitcoin is kind of
no.
So I do want to say one word at least. Okay, so if anybody actually believes in this chart, there's a point to buy Bitcoin, and it's been accurate for a long time, for a decade or so, 13 years maybe. At this point, you are close to like basically a screaming fire sale. That's what this chart says. It's in the buy zone. And if you believe that this chart one day will reach back to the oversold territory, we're still talking about it should be 100 to 200 grand back to oversold. So
from the current levels now, but the thing is, the further you go out, there's always more. With Bitcoin, there's always more buyers than sellers. Remember that. There's always going to be more potential buyers than sellers of the asset class. And what the halvings do is the ones that have to sell, meaning the miners, are incentivized not to sell at a certain point within every 4 years for at least a year and a half or so before, because of the fact that the halving event is going to happen. This is what's brilliant about Bitcoin as an asset class, is that it builds in these sort of volatile price movements, it just in the mining of it itself. Whereas gold, you don't have that.
Carlos, this just looks like a chart that says buy the dip, like any stock chart.
It's not.
It's never been broken.
How is this not just?
Because this is the logarithmic progression of that most asset.
You just say a buy the dip stock chart is logarithmic
on.
expression.
No. What you're doing is you're acting like the 25-year-old we make fun of you for being sometimes.
No.
But on some real shit, Charles. I'm not even trying to be funny.
I'll show you something.
Goes down.
Hold on.
People buy it when it goes down. How is that not buying the dip?
Because it's different. It's different. Bitcoin does not have quarterly returns. It does not have price to sales. Does not have a PE. This is about adaptation. This is more following like the S curve of typical adaptation.
So, well, I want to show you this. You're saying, okay, it's just a chart, big deal. Okay, this is 13 years of history for an asset class, right? So for Bitcoin, that's why it matters. Let me just bring up another chart just to put it to equities here.
You can. I'll share that chart, but again, Carlos, I still don't understand. It's a chart. It goes down.
I just want to show you this.
It doesn't have a price to sales.
Hold on, I just want to show you this.
When something goes down, you buy it because it's cheaper. It goes up.
But again, what you're thinking.
Hold on, can you take a look at this?
Thinking of it as a stock, dude. Let's not talk about.
Well, I do want to relate it to
not a stock, an asset.
Yeah, but an asset class is different.
Guys, I want to relate it to Amazon. If once again, charts do matter because these growth companies are similar to Bitcoin actually, so they do follow some trend. That does happen. If you look at Amazon on the monthly chart, if people actually paid attention to it, you would know when to buy Amazon. It's not even that difficult. Amazon has been in a long bull trend since what year is that? 2001. It's been in this massive trend. So my point is not about Amazon in per se, but if you basically look at Bitcoin, it's also in another trend. It's important to follow these trends, and that trend is saying, "Hey, this is cheap right now." Okay.
Right. Well, wait, but the other part of it,
from 70 to 30.
Wait. But the other part of this equation is what Richie Mello is saying at 458, because the supply of Bitcoin declines every run. Like, whereas any stock at any point, they can dilute you, they can print more shares and dilute the overall existing supply. It doesn't happen with Bitcoin. So we are running out of Bitcoin. And as you run out of Bitcoin and less get introduced, like you have to understand from the point of the halving, like right now we have a steady supply. I'm not sure exactly what it is. It's 3 Bitcoins that are mined every 10 minutes for a 24-hour period. So you can calculate how many new Bitcoins are coming in. That is actually diluting the existing supply, right? So every 10 minutes, three Bitcoins are generated by the network and paid out to the miners proportionally based on the amount of work that they did. What's going to happen at the halving is instead of 3 Bitcoins every 10 minutes coming in, the rate of dilution.
Take a guess. How many?
1.5.
Yeah, but Carlos, can't a company buy back their shares as well?
No.
The chat is saying.
I
mean, it's the same concept.
Wait.
Asset. You're trying to act like the mining is so unique. It's just like buying back shares.
They're the same thing in terms of the end result.
First of all, both are good to invest in. I don't know what Carlos, you agree both are good to invest in. Okay.
I agree that they're both I agree. Yes, they're both equally as good to invest in. You want to invest in companies and you want to invest in crypto. But the idea that the rate of dilution is planned and known is something that makes people very comfortable with buying.
I agree.
Because it's like someone said, if Carp told you, I'm going to dilute you 50% or whatever next quarter, everyone would sell Palantir.
Yes.
It would be like, I don't want you to do that to me. It's the fact that you don't know is why, people hold on. They say, hey, maybe he won't do it, or maybe it won't be as much. But we know exactly what the rate of dilution is in Bitcoin right now. It's 3 Bitcoins every 10 minutes. When that goes down to 1.5 every 10 minutes, automatically we're being diluted by half. And then in 4 more years, it's going to be 0.75 Bitcoin. Do you understand that like the natural dilution of the asset is going to decrease to virtually nothing?
Yes. Yeah.
And that makes sense. The price has to go up in order for the miners to be incentivized to still mine Bitcoin.
Well, that's not true. That's not necessarily true. It doesn't have to go up because the miners don't have to be incentivized to do their job. They can stop mining.
Yes. Right. They can't stop. They can stop mining, but they have.
And they do. By the way, that's the whole thing. When the prices crash, right? They do stop mining. They turn off.
It just makes it unaffordable.
Well, they do, and then what they do is they lower the difficulty, so you need less machines to mine.
No. As they leave the network, the difficulty adjusts itself. I forgot when every day or whatever it adjusts.
It's based on how many computers are trying to solve that problem.
That equation, exactly. So there's I don't know. There's so many positives, and just seeing
AMIT is on Pornhub, so don't worry about it.
And he's on OnlyFans, and he's only accepting in crypto.
I'd rather invest in an OnlyFans girl who's popping on TikTok over Bitcoin. Bro.
Anyway, I don't.
Every TikTok and get more subscriptions.
Okay, so I do want to answer this question because people are saying, "Hey, you guys bought in earlier, blah blah blah. It's 27K." So yeah,
they're right. You guys bought in very early.
Very early, exactly. So, dude, you got to pay attention.
How do you know?
What can I say? So, but hold on. The point is that if this asset class is going to be real, it's smart to start DCAing a small amount. And I'm not saying go into 27K, all of it. That's crazy. I think Bitcoin is going down right now. If we're going to end this podcast at 8 o'clock, Bitcoin is probably going down. And this always happens before the halving, that we can have a 14,000 Bitcoin again and Ethereum cut to $500 or whatever. So this is your chance to DCA into it. You're never going to catch the bottom, by the way. I don't know how people think that they're going to catch the bottom. I've tried on Bitcoin and I think I failed. I think I got 4,000 and it hit 3,200 the last time it crashed. And Ethereum crashed to 80 and I got 100. So it was close to the bottom. Congratulations. But I still DCA'd all the way down to $100.